right, so let's break down STNLs in 2023, what we're going to be seeing in that marketplace. George, you're a broker and an investor in this space. What do you see happening in that market?
I think let's break that up actually, because I think it's go by quarter.
Okay.
And kind of what we're expecting, what we're looking to see. Last year there was a lot of inventory that came on the market for the single tenant net lease market, especially near the end of the year, from the second half of the year, but more around the end of the year. And a lot of that inventory was received by a lot of buyers as overpriced. With the interest rates going up, we still hadn't seen the cap rate compression or cap rate decompression, I should say,
Okay.
where the prices were coming down a little bit to adjust for the interest rates. And because of that, there's a little bit of a disconnect, and we saw a slowdown in transactions. We still had the core transactions, especially the 1031 exchanges, and people looking for additional investments to place money that were cash purchasers. But we saw a slowdown in the overall transactions as buyers were trying to adjust and wait for prices to come down because of the interest rates going up. So with that in mind, I see that still happening right now in the first quarter. That was actually going on all the way to the end of last year, and then it's going to continue out for the first quarter as well. We're still adjusting. We're starting to see cap rates rise up a little bit, so prices are coming down. Investors now are jumping in, but they're not as fervently as they were early last year.
Okay.
But they're starting to come back into the marketplace, start looking at different, and we're still the core again. 1031 exchanges and cash purchasers looking to get some passive income that's a little bit safer with depreciation tax benefits.
All right, before you jump into the second quarter, let me ask you, are you seeing more properties come on the market?
I think it's a little too early to tell right now because of the holidays just ending right now.
Okay.
There was definitely a slowdown at the very end of the year, but we are expecting to see quite a bit more properties come on the market now, especially with price adjustments. I mean, there's a couple of REITs as well that you recently announced that they're selling hundreds, if not thousands, of properties as well, and a lot of those are single tenant net lease properties, and they're going to be selling this quarter. So we're expecting to see those on the market as well within the next couple weeks. And then in addition to that, your typical sales with developers and investors as well.
Okay, second quarter.
Second quarter, I think this is where we're going to actually start seeing the deal flow pick up. I don't think it's going to be back to the highs that it was back in 2021 and
yeah, a little hard to do
in early 2022. But we're definitely going to pick up quite a bit on the sales. I think on the second quarter, I think there are still going to be a lot of potential buyers that are sitting on the sidelines, waiting for pricing to adjust. But I think that the prime properties are going to go very quickly because people have been waiting and holding and wanting and waiting for the investments. And as we start to stabilize a little bit more, we're going to see a lot more investors then just pull that trigger.
Okay. All right. Now I know before you had your sellers had this price in mind, right, and your buyers had this price in mind, and there was that void that you guys were struggling to get put together. Mm-hmm. Have you seen that get closer and closer yet?
Absolutely, and it's coming from the sellers end a little bit more so.
Yeah.
The buyers are holding firm a little bit.
Every cycle this happens.
Every cycle it happens. And it's I don't want to say it's a wait and see kind of situation, because it's really not. It's more about adjustments and seeing as they adjust. And typically speaking, when you see a interest rate hike, it affects the commercial loans a little bit slower than it does residential loans. So as the commercial loans get affected by the interest rate hikes, and nor are they as high as the residential hikes,
right?
Because they're typically tied to a different metric, like the 10-year Treasury versus the Fed rate. Mm-hmm. So with that in mind, we're seeing the adjustments. The sellers that had a high basis to begin with. Let's say there were developers buying land in 2021, building the properties, having certain return expectations. We're seeing them hold back a little bit. But now that as overall prices have adjusted, we're also seeing prices on land adjustments. So you're seeing developers stepping in now and then delivering product in 6 months to a year that is now priced more in line with what the current debt market is.
Okay. Third quarter.
Third quarter, I think well, and this is also assuming that we're stabilizing a little bit on the interest rates. So,
Well, they're going to raise it at least one more time.
They're going to raise it at least one more time, at least. But I don't think it's going to be as high and it's going to be as volatile as it has been. So let's fingers crossed on that. So third quarter, I expect that actually to start really. That's where we're really going to start seeing a little bit more interest peak up, and you're going into the summer months now. And then it's rolling over into the fourth quarter as well. I think there's going to be a big push, especially, we didn't see as big of a push this year with all the people looking for tax benefits, year-end tax benefits that we typically see. However, we did see a small little push. I think that's going to really be at the forefront next year when it comes down to the fourth quarter as well.
Okay. All right. So you still think it's a really great place to be putting your money right now?
Absolutely. Real estate in general,
probably the most stable, right?
Single tenant net lease, I think, because what we're dealing with is, it can be considered one of the more stable assets in the fact that you're also looking at an asset that is considered very much recession proof in the sense that you go into it with a long-term lease that's 10, 15, 20 years with guaranteed rental increases throughout that lease term.
Yeah.
So if you're going into it, you can really project what your expectations are going to be for at least the next 5, 6, 7 years. And if you look at the cycles and recessionary cycles, we're typically looking at a 2 to 3 year window, and then another 1, 2 years to bounce right back up to where we were, and then we're going to start getting a growth pattern. So if you're looking at a single tenant net lease with a 10-year lease term, you're going to weather that recession pretty well. Or a 15-year or 20-year for that matter. So, I think it's a good opportunity and a good investment vehicle for the times right now, as well as, for people looking for a little bit more passive income.
Yeah, and I just love the fact that it's so liquid.
Yeah, absolutely. There's always a market. That's the beautiful part of it. I mean, we can talk about other asset classes, but I know that there are certain asset classes in the last quarter of last year just completely died.
Yeah, it's going to be good. All right, George, thank you very much.
Absolutely.
And if you haven't done so, make sure you subscribe to the channel and give this video a like.